Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. The Finance Department pushes for a continued and robust vaccine drive, saying it's key to sustain economic growth. That's as the DOH begins inventory of COVID-19 shots to determine those that are nearing expiry.
PEZA expects to rake in more investments after the May 9 polls. The agency also hikes its growth target for the year on the back of the passage of economic liberalization measures.
And following these successive rounds of oil price increases, analysts expect inflation to have accelerated in March.
We begin our broadcast with the Finance Department calling for continued support for programs to contain the COVID-19 pandemic to ensure sustained growth.
The DOF says a robust vaccination effort must go on alongside a prudent reopening of the economy to sustain economic momentum. As of March 22nd, over 65 million Filipinos have already been fully vaccinated. Of that number, only 11.6 million have received booster shots. That's why Presidential Advisor for Entrepreneurship Joey Concepcion is renewing his call to the public to take booster jabs or to get vaccinated. Concepcion revealed that about 27 million doses are set to expire in July. The Health Department says it's already doing an inventory of COVID-19 vaccines to identify those that are nearing expiration. Meanwhile, PEZA expects more investments to enter the country after the May elections. PEZA Director General Charito Plaza says investors are on a wait-and-see mode, saying enthusiasm and heightened activity will come after the poll. She said investors are watching the change of policies affecting investments. PEZA is now targeting a 7 to 8% growth in investment approvals for 2022. This is higher than its initial target of 6%. PEZA says it scaled up its target on the back of the passage of three key economic laws: the Public Service Act, Retail Trade Liberalization Act, and Foreign Investments Act. Even House Ways and Means Chairperson and Albay Representative Joey Salceda pins his optimism on these liberalization laws. He says that with these measures, together with the CREATE law, foreign direct investments could rise to $20 billion within 5 years.
Now, despite these government projections, the Japan Center for Economic Research slashed its GDP forecast for the country to 6.3% from their earlier projection of 7.1% for 2022. Now, JSER believes that the country may not be able to reach its economic targets this year due to the effects of the Ukraine-Russia crisis on commodity prices. The new forecast falls below the government's 7 to 9% target for the year. The Philippines got the biggest downward revision in the entire ASEAN region.
Now, analysts say inflation likely accelerated in March with a spike in global crude oil prices pushing food and transport costs up. A Businessworld poll of 18 analysts yielded a median estimate of 4% for last month's inflation. That's nearer the upper end of the Bangko Central's 3.3 to 4.1% projection. It realized this would be much quicker than the 3% inflation print in February. Still, it will be slower than the 4.5% seen a year ago. Analysts said the surge in pump prices was a major inflation driver in March. Now, speaking of inflation, the IMF says the elevated global shipping cost is likely to further push inflation, especially in import-reliant countries like the Philippines. And as they expect supply chain issues to persist, how is the Philippine Chamber of Commerce gearing up for higher costs? We have on the show their president, George Barcelon. Good morning, Sir George. Thank you for joining us today. Okay, Sir George, again, so much happening around the globe here. You have China, you have, of course, what's happening in Ukraine. That's been affecting current levels of shipping costs. At what level are shipping costs here now in the Philippines, and by how much has this affected input costs both for imports and exports?
Well, because of the geopolitical issue in between Russia and Ukraine, the oil prices shot up well, at least we're seeing some bright spot that has gone down below $100. But having said that, the ripple effect is quite high. You know, the cost of fuel, power, commodities, and it even affects the food security issue. You know, Russia and Ukraine, they are exporters of wheat, and that's going to be inflationary. The inflation, gladly, I mean, has been able to be maintained like slightly hovering over 4%. But in other countries, in North America and also in Europe, it has gone up quite high. They're bordering between 7 and 8%. So we hope that the government would be able to factor in this cost, but at the same time maintain the monetary controls, no, so that the inflation would not be too high.
Okay, so for our viewers to better appreciate this whole scenario, can you give us an idea as to which products are most affected by these supply chain issues?
Well, the supply chain is greatly affected by the fact that the congestion in the port and also the lack of shipping vessel. So actually lahat na industrial need for importations of coal is one thing, for iron is one thing, for wheat is one thing. So all of this has a trickle-down effect, wherein it affects our cost of production, whether it be industrial or whether it be food-related. The private sector has been holding on to price increases because we don't want a knee-jerk reaction. You know, of course, we've heard the labor sector clamoring for a review on wages. And if there are compelling reasons, we have the tripartite, and the private sectors are willing naman to listen. But hopefully that the case in the war will be resolved soon, and the oil price can come down, and that would really be give us some confidence that the inflation can be tamed.
Okay, sir, let's talk about the timing here. You know, at the height of the war, well, it's of course still ongoing, but we're hoping for a resolution. Finance Secretary Sonny Dominguez mentioned that this would just be a temporary issue, particularly when it comes to inflation. They've tried to reassure us that, you know, there have been wars before, there have been issues before, there have been oil price hikes before, but that this eventually did not persist. However, you have the IMF saying that it is persistent, peaking after 1 year and lasting up to 18 months. Tell us, you know, to which side are you more inclined to say that this is a long-term effect?
Well, on the constraints of the logistic, no, I think this will go through all the way the year 2022 and could spill over 2023. The lack of cargo vessel. Although the freight freight fees is very high, exporters now have to pay about four to five times the freight that they used to pay. So that has been hurting. On the other side, the shipping companies has ordered new vessels, no? But what I heard is they will be online only 2023. So the congestion is still there, not only on the shipping vessel, but also on the port operation. You know, China again has been hit with some surges on COVID-19. And with the zero COVID policy, they're closing down some ports. And that has affected the logistic issue and will drive costs higher. The war also in Russia and Ukraine, the shipping companies has to route the vessel to avoid, you know, this area of conflict, and it takes longer to make shipments. And again, that adds on to the the limited supply of shipping vessels. So we're not going to see that immediate solution for within this year. And I do agree that from the point of Department of Finance, that this is a temporary issue. I look back on the chart of the fuel on oil in the past 10 years, no, and I can see that through the decade, I think there are about 6 or 7 years wherein the oil price has gone down. It's only this couple of years wherein because of geopolitical issue that the oil price spiked up. So with the economy not really in full force, no, not only for us but also for North America and Europe, the demand for oil is not that big.
Okay.
This is a temporary issue, and I go along with what the Department of Finance said. No, probably this would be tamed.
Okay. Sir, do the volumes not compensate for this issue in terms of inflation? I mean, you have the rest of the world opening up. You did mention China, possibly not yet there in terms of also like demand, it's softening. But does this not, has the impact of the reopening of the global economy not compensated in terms of volumes for our exports? And in addition to that, also the weaker peso, has this not benefited our export market?
Well, I think the exporters are taking advantage. They can ship their goods out. Earlier, I mentioned about the lack of cargo spaces, and that's quite a big concern for those exporting perishable products like mango or agri products. So we're optimistic that this can be resolved. But what's happening now in North America, in Europe, is that they're more concerned about energy costs. The energy has spiked up, no, because of the fact that I think there's a limited gas supply coming from Russia, and it has sort of tamed down the economic recovery. For us, the projection that was made earlier, I heard you said about 6.5%. I think if things settle down, that would be achievable, even with the new government, because there are so many things that have been set that is favorable to our country to attract foreign investment. You know, the investment, the tax reform, the bills that have been passed to attract investment. So we're quite hopeful, guarded optimism, wherein the inflation should not go too high, interest rates is maintained, and our wages is satisfactory to the labor sector. So we can work together on a partnership going to with the new government.
Okay, given that, Sir George, what for you is a tolerable level of inflation here, on a level that we can afford for this year? And at the same time, how, given all the supply chain gaps and issues here, how much of a boost are we expecting here from the RCEP? Do you see that as a way, in a way for us, a country, to at least circumvent all these issues as well?
Well, tackling the first question on inflation, I think in the past, the administration and headed by the economic cluster, headed by Secretary Domingo, they've been able to really contain. Of course, there are some blips in our inflation before, when the prices of rice shot up, no? And then also the inflation caused by the price of pork because of the swine flu. But both of this issue has been controlled with the rice tariffication program and the allowing more importations of pork. So our inflation is pretty well handled, I think, no? I'm bordering 4%, unlike other countries in Europe, 8%. So having said that, I think as long as there's no serious spike, no, or the war in Russia and Ukraine does not deteriorate any further, and the oil prices doesn't shoot up beyond $100, I know Department of Finance is pegging the oil price of oil at 105, no? But it has come down below 100. So that's a good sign that the inflation can be maintained at a low rate.
All right. Again, thank you very much for your insights and your time this morning, George Barcelon, President of the Philippine Chamber of Commerce and Industry. Now, coming right up after the break, local shares are expected to remain volatile this week as inflation is expected to have picked up last month.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Dan, inflation in focus this week amid continued volatility in commodities. What's the latest on those markets?
All right, Jess, so let's take a quick peek at the oil story here. This, of course, as like you mentioned, tomorrow marks the day when we will be getting that PSA data on inflation. And take a look at how the WTI is doing right now. It's finally below 100. So not all the oil markets are trading below $100 a barrel, but I did want to show this specifically just to highlight how perhaps this might be the direction of how that is going. And just as you mentioned, Jess, the markets will be, of course, quite rocky. And you can see the open today already down by 0.1% this Monday. This, of course, after we had seen on Friday falling we already again fell after we had fallen in March, the biggest monthly loss since July of 2021. So we actually were down by 1.5% in just the month of March. It seems to be going down that direction. Let's take a look at one specific industry that we are looking at, and that is, of course, the REITs here. This, as we have a couple of new strands on that. You've got, first of all, Mega World. They are infusing additional 5.3 billion pesos in office assets. That is prime office properties in PEZA accredited zones. There's been a lot of talk, on those PEZA zones, and that will raise the portfolio of Mega World's REIT to 65 billion pesos. Now, what would that entail? McKinley West Township office assets. You've got BPOs there, and this would be the first tranche of the company's 20 billion peso property for shares acquisition plan of 2020. You can see the MREIT trading here. Let's take a look at that. That is up by 0.9% to 18 pesos and 58 centavos. Another one that is heavily, gearing up for their own REIT IPO is, of course, Vista Land, and that is jumping up by 1.5% already in this Monday trade. This, as they mentioned, that they will be building up 36 billion pesos of a portfolio ahead of their 9.18 billion peso IPO. And these assets will comprise 10 community malls and 2 EcoZone accredited office buildings. So very interesting there. And finally, I just wanted to watch out for one other strand, that is SM Investment Company, down by 0.7%. So going together with the bourse, possibly dragging that down. Of course, SM is one of the big names here. This, as they mentioned, they will be buying a geothermal company for $304 million. It's around 15.7 billion pesos. Jess, that is in a swap of shares, and this is owned by Tiwi and Macban Steam Fields. This is actually the operator of Tiwi and Macban Steam Fields, which is owned by All First Equity Holdings. So very interesting foray of SM Investment Corporation into renewable energy, Jess.
Analysts say the recovery in smartphone sales in the Philippines may be affected as consumers become more price sensitive. That's amid the spike in prices of basic goods in the country. International Data Corporation, or IDC, says smartphone vendors have been anticipating a rebound in sales this year as consumers spend more due to looser mobility curbs. But the company added that smartphone retailers will remain cautious about any price increases since everyone is still reeling from the pandemic. IDC noted that the Philippine smartphone market contracted by about 5.6% in 2021 as lockdowns dampened buying activity and global supply bottlenecks restricted supply.
Now, demand for aircraft maintenance in the Philippines is seen growing strongly as the travel industry continues to recover. Aircraft maintenance company Dornier Technologies sees the recovery in the commercial airline industry as a very positive development as it increased demand for both base and line maintenance work. However, the firm also pointed out that airport space and costs remain a major hurdle for the MRO industry. They also urged the government and airport operators to encourage investment in the aviation MRO sector because it creates well-paying jobs. What are are the key things that we should expect on the global front in the coming days? Let's take a peek at the week ahead on Bloomberg.
It's a white-hot labor market.
The labor market is white hot.
The economy is red hot. The labor market is red hot.
This is an economy and a labor market that's overheating. The Fed has to accelerate.
The Fed has been behind the curve.
The Fed's in the toughest position that maybe I've ever seen them.
They're probably about 100 basis points behind the curve.
It probably makes sense to get some 50s in when you've got an economy that's moderating.
We're going to see slower economic growth. We're going to see Fed rate hikes.
I think they'll probably do that the next couple of meetings.
The Fed is expected to hike much more aggressively than it did in the previous cycle.
Today's report only will reaffirm that view.
Some of our earlier guests are reacting to yet another robust U.S. jobs print. Let's take a look now at the key events for your week ahead, Sherry. The Fed will release the minutes from its March policy meeting on Wednesday, providing some insight into the appetite for a half-point rate hike next month. Here in Asia, it's all about the RBA and the RBI, both expected to stand pat, although RBA Governor Phil Lowe is facing increasing pressure to begin tightening soon. Meanwhile, we spoke about Shanghai earlier. It's planning to end its lockdown on Tuesday. We've seen record cases over the weekend that could put that in jeopardy. And Ketanji Brown Jackson is set to become the first black woman on the U.S. Supreme Court, with a confirmation vote set for later on Monday, Sherry.
And Heidi, food security very much in focus given the war in Ukraine. We get the UN's food price index on Thursday, followed by a council meeting in Rome on Friday. The index hit an all-time high last month, with the conflict threatening to create further chaos in crop trading and push prices even higher. Vegetable oil prices were the main driver in February. That number should surge once again, and you can see in this index how high we're talking about. Those are the major events in your week ahead, Heidi.
Presidential candidates shied away from engaging in a war of words as they focus on more wholesome discussions in last night's COMELEC presidential debate. Now, despite the absence of Bongbong Marcos, the poll body considers this latest round of debates a success. Greg Gregorio with the details.
Presidential candidates, save for Bongbong Marcos, squared off again in the second COMELEC-sponsored Pilipinas debates with the moniker of the Turning Point. During this edition, candidates were given longer time to answer questions of pressing concerns. Sunday's debate focused on topics involving government accountability, corruption, political dynasties, human rights, and foreign policy. Unlike the first debate, where all candidates answered one general question, candidates had groupings for them to answer separate questions per group. They were given 2 minutes to directly answer questions last night and 30 seconds for rebuttal. The groupings in every segment were determined via board lots to engage the group in a mini-debate. Such debate, however, did not happen.
Siguro nga sa sobrang dami na rin ng mga debate na kanilang attendan, napuntahan. At the same time, medyo naging friendly na sila sa bawat isa. Napansin natin na lalo pa pagkano nag-briefing kami, nag-uusap-usap, nagkukumustahan. Eh siguro nga mas focus na lamang sila sa issue rather than focus sa personality, yung sa bangayan na wala namang patutunguhan. Mas nakita natin yung ganda ng isang debate. Na talaga namang dapat ganito ang isang debate. Issue ang basihan.
In the end, the COMELEC is still satisfied with the outcome of Sunday's debate. The debate series is now down to its final 2 editions, with one each for presidential and vice presidential candidates, the format of which will be in a town hall setup. The COMELEC says the public should expect a different type of discussion.
Kadami natin kukonsultahin ang mga eksperto, yung mga may karanasan sa debate. At siyempre magtatatanong din tayo sa mga tao, lalo na sa kalsada, mga tao sa mga bahay-bahay natin. So magkakaroon tayo ng napakalawak na konsultasyon. Hindi COMELEC lamang, hindi Vote Pilipinas lamang, taong bayan mismo ang magbibigay ng kanilang katanungan.
The next vice presidential debate will happen on April 23, while the next presidential debate will be on April 24. For News 5, Greg Gregorio, we are One News.
And that's a first look into the business day this Monday, April 4, 2022. Join us again tomorrow at 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Thank you for watching. Mask on, wash hands, and stay safe, Philippines. We are One News.